Welcome to the Care Right podcast, your go-to resource for all things elder care. Guiding us through this journey is Annalee Kruger, the founder of Care Right Incorporated, and she has been steadfastly supporting families across the United States. Each episode brings you expert insights, innovative strategies, and practical advice, ensuring that you're well equipped to provide the best possible care for your loved ones. Expect to gain valuable knowledge, learn from real-life stories, and get inspired to take action in your own caregiving journey. So buckle up as we dive into an in-depth discussion of elder care planning and together embrace the journey of caring for aging loved ones on the Care Right podcast.
Hi everyone, my name is Annalee Kruger, the owner of Care Right Incorporated. I am so excited to have Marc Glickman as my podcast guest on the Care Right Caregiver Crisis podcast today. Welcome. I'm going to go ahead and introduce you. So Marc is the CEO and co-founder of Buddy Inns, or maybe you want to say that, Buddy Inns, okay, a leading long-term care insurance agency and insurtech company. Buddy Inns helps develop educational and technology resources for a national network of long-term care planning specialists. Our mission is to help families across the country get a long-term care plan and to support the over 50 million caregivers in the United States. Marc has over 15 years of experience as an actuary with a specialty in long-term care insurance and investments. He is also a licensed insurance agent in all 50 states. Marc is on the board of advisors for CLTC, a training organization for long-term care insurance professionals. He has unique insight into the inner workings of insurance, having consulted for several insurance companies to help them design their long-term care insurance products. Marc earned his degree in economics from Yale University. In 2019, Marc was named one of the top 20 innovators in the insurance brokerage space. Welcome.
Thanks, Annalee. Appreciate you having me.
We have zero of the same background. I'm a social worker and a family mediator, and you do all things long-term care insurance. So that makes a good collaborative approach, right?
Okay. It also tells you how many people are impacted by this, the fact that we're in the same world, even though we come from two very different backgrounds.
That's right. That's right. Because what we do and what I do with Care Right with aging planning for families touches every single door across the world, right? Because everybody knows a family member who is a family caregiver and probably wondering, oh my goodness, what did I get myself into? Everybody knows a family member who's aging, because who isn't? Every day that we're on this side of the dirt, we're aging, right? And everybody knows someone who's in the dementia journey. And we know that dementia care is a long journey and a pricey one as well, from a financial perspective, but also from the cost of having to be a personal family caregiver can be very overwhelming and exhausting if you don't have enough supports in place and if you don't have a financial plan in place. So we do similar stuff, but we stay in our own lane. But at the end of the day, the family is in a much better shape, in a much better condition. All right, so this is for families. So what are a couple things that families who are in that caregiving journey or seniors who are starting to think about, okay, I don't want to be a burden on my kids as I age, but I also kind of want to stay at home as long as I can. So how do we make that work?
Yeah, it's a tough situation, right? It takes a village to take care of a loved one, right? It's a financial process. It's an emotional process. Now we tend to focus on the insurance side of how do we finance the care that's needed into the future, right? And what does that cost of care look like? How to make sure we're getting great value, for the money we're spending, so that our families don't have to bear that burden ourselves, right? We don't have to rely on them to be caregivers when we should be hiring professional caregivers to do it. So we focus our side of the world on the financing part of that journey. And in today's marketplace, right, there's a lot of different options for long-term care insurance. So the one unifying theme is most of the ones that are tax qualified long-term care, which give you tax-free benefits, have kind of a standardized set of triggers that allow you to claim if you buy an insurance product. So I can kind of share a little bit more on that side of the house, because I know a lot of people have questions. They might own a policy themselves, or they may be looking at buying a policy for themselves. So happy to share insights into that world.
That would be perfect. I want to start with the The most basic elementary thing first, though, is the family communication piece of saying, hey kids, this is what I have already in place. I have long-term care insurance. Here's my person that you would talk to if I have, if I would ever need to go on claim, or if you have questions. Here's my professional team of people that I'm working with, and communication, because that's one of the big problems that when families come to me, they have no idea what their parents have in place. They've never talked about it, or the kids try to talk about it and mom and dad shut them down because they're like, that's our personal business. So one thing is, because I've had a lot of daughters and sons literally paying out of their own pocket for mom and dad's care, simply because no one thought to ask about, do you have long-term care insurance or some way to cover this home care? And kids can't afford to keep doing that long term. So I think first step is having the conversations about, what do we have in place already if we need care, and where are the documents, and what's our actual plan? So now you can go.
Yeah, no, great point there. Like, half of the battle is getting your plan in place, just like you described. It's not buying an insurance product. It's, what are we going to do? Who knows about it? Like you said, usually we try to have the spouse and the kids in that conversation when we're talking about buying an insurance policy, because when they're at the first conversation about that, they know exactly what's been happening. And you want to document that with whoever it is that's kind of, documenting your trusts and your wills and your estate. If you have financial planners, you want them to know as much as possible about these. The nice thing about the insurance world is part of the regulation requires you to allow a third-party lapse notification. So if for whatever reason you stop paying your premiums, maybe it's because you're starting to have cognitive issues. They actually require in the law that the company has to have somebody they notify as a third party to let them know that your insurance policy might lapse. So some of this is kind of helpful in the insurance process, that it's kind of baked in to consider those things.
For sure. So sometimes adult kids are like, okay, so yeah, we found a policy, because again, we didn't communicate as a family. So they're like, oh yeah, when mom was in the hospital, we started rummaging through her desk, and we happened to find like all this stuff, and we don't know what it is. I think it's helpful, just as a family member, to get familiar with these policies and know the lingo. Like, what is the elimination period? That means how many days out of pocket is your loved one going to have to pay before you can activate your insurance policy? Because they're all different, right? So getting familiar with what that policy is, and asking questions sooner rather than when it's at the 11th hour and you're starting to need to look at, okay, now what are we going to do for care?
Yeah. And that's the best thing to do when you find that policy, even if you didn't know it existed until right the point of when you need it, is to read the contract. Each policy comes with a contract. It has language to talk about that elimination period or deductible that Annalee, you were just talking about. It tells about how much per month it pays for. It tells you about how long the policy lasts for. And to some degree, those contracts are relatively standardized, meaning there's similar sections. And again, they're contracts, so they can be a little bit lengthy, to read. If you need the support of somebody like your financial planner to come in and help you decipher it, I would definitely recommend reading that contract as the first step. And generally speaking, when you have that need, you want to contact the insurance company as soon as possible. There are language in the contracts that say you need help with at least 2 of your 6 activities of daily living or a severe cognitive impairment before the policy will actually pay for your care. So the most important thing when you're filing a claim with the insurance company is to understand if you meet that eligibility requirements. So if you ever heard about long-term care claims denial, I would say a vast majority of the time, it's because the claim that is filed doesn't match up with what the insurance company determines as eligibility. And it's just a miscommunication when you think about it between, the two sides. And sometimes family members, they downplay the severity of their needs, right? We don't want to admit to the fact that we need help.
Yeah.
And if you downplay the severity of your needs to the insurance company, they're going to think you don't need the policy.
Right.
So we're seeing a lot of issues there. So make sure to read the contract, make sure you're filing accurately what your needs are. And therefore, there aren't a lot of issues when you file a claim, with the insurance company.
One of the questions I sometimes get is, well, we only have $300,000 until the end of our life, right? That's what their policy is. And they're like, well, we should wait to use the policy until, we really need it, or, the care is really, much more involved than that. And I know that's a case by case basis, but do you have any kind of general blanket response for when, because that question comes up a lot. Well, there's a time limit on it. We don't want to run out of it when we really need it the most, right?
Yeah, I would say it rarely makes sense to try to conserve your benefits. As soon as you're eligible for it, you should file the claim. You should try to get access to the money. Some of the policies will reimburse you for the care that's provided. So if you're not receiving care, you won't receive anything from the insurance company anyway, but it might get that deductible, that elimination period going. So that next time when you actually do want to use it, you've already satisfied that and you can get paid by the company right away. There's some companies that offer what are called cash benefits instead of reimbursement benefits, which they'll just pay you in cash once you're eligible, and you want to have access to that, even if it is to improve your house or to supplement your caregivers or to pay your family members if they're providing the care. There's a lot of options as to how you use the fund with cash policies. So we don't see a lot of reasons to wait on getting your benefits out of your policy.
I think you just touched on something that's I know you just touched on something important, is that looking at the policy, because a lot of these families, they've either quit their jobs or they've gone down to like part-time, or they've changed their jobs so that they can work more of a menial, I shouldn't say menial, but a less stressful job so that they have the flexibility to take care of their parents. So check to make sure that if there is a way that you can get compensated. Now, it's not probably going to, if you're an executive in a business, it's not going to like match your salary, but there could be some built-in compensation to that plan.
Yeah, and most of the policies require independent caregivers, professional paid care to receive the benefits in the policy. The family care, generally not, unless it's one of the cash policies. But oftentimes the insurance policy is actually a supplement to your support system around you. It might provide for 4 hours of care for you when you might need 8 hours of care, and the 4 hours of care provides a really important respite to your primary caregiver. So it's never an either or situation. We always think of planning. Should I do this or should I do this? In our world, it's a spectrum of the more support system you have, the more funding options you have, the more you'll have flexibility in the future to get the care you want to have and to actually save your family or your caregivers from a lot of that burden and stress.
That's right. That's right. And as far as, when it's time to go on claim, can you talk a little bit about what that process looks like?
Yeah, so if you own a long-term care insurance policy, typically you will file a claims form with the insurance company. And again, on that claims form, it will ask you, what are your activities of daily living, right? Are you having trouble performing them? And you'll list out exactly what you're having trouble with. And you'll generally submit that directly to the insurance company, and their claims department will review it. And it may take, a few weeks to review that. They need more documentation, they come back to you. But at the end of the day, it's similar, I would say, to filing a claim for health insurance or automobile insurance. It's just a verification process, again, to that contract. And then the insurance company will start paying you. And you can even, in this day and age, get, automatic checks, every month based on, reaffirming probably once a year that you're still eligible for benefits. So that's kind of what the process looks like at the end of the day. It's probably not as strenuous as we hear, but when you get caught up in the system, when the company can't determine your eligibility, if they deny your claim, then you have to go through an appeals process, and that's where it can get into a lengthier situation. It can get litigious, but at the end of the day, the insurance companies are motivated to pay the claims that are due for a number of reasons. One is that they're highly regulated, right? And they, long-term care is one of their many lines of business, and they don't want it to impair their ability to sell products. The other reason they're highly motivated is it's never a good situation with someone who needs care is suing a big corporation, right? They're not generally gonna win that battle.
That's
so
not
they
good
do
for
everything.
PR.
Yeah, that bad PR, right? There's no good reason why they want to get into that. So they do everything possible to avoid conflicts. And they want you to work with them. So, despite, what we hear about this faceless, big insurance organization, at the end of the day, there's really caring people, in these claims departments, the people we work with every day. They just want to make sure that they're the gatekeeper, because they don't want to overpay claims, because what that ends up doing too is it raises the cost for everybody else that's buying the insurance, because that's the concept of this pooling of risk.
Yep.
So as long as you understand both sides and their motivation, they're not here to, deny you or, be somebody who's conflicting with you. They're here actually to make sure the system's working as it's supposed to.
One of the other questions, and it's just because, people are mobile, right? We have active seniors, and like I'm in Florida, so it doesn't seem to, they'll come down for a season and then they have a stroke, or they have a heat stroke because they're out on the golf course for 6 hours and not drinking enough water, or they have a health issue that then they get sick down here. How does the traveling long-term care insurance policies work? So if they had to go on claim down here, but their intention is to end up back up north because that's where their kids are.
Yeah, and the nice thing about long-term care insurance is it's portable.
Yep.
Regardless of where you buy it in the United States, generally speaking, most policies will pay you in the United States. Many, if not almost all policies pay you in Canada as well. If for whatever reason you move and you end up living in Canada, for example, or you end up living in Florida, for example. So at the end of the day, it's pretty flexible. There are some policies that even have international benefits. So we run into that with a lot of people who may be in this country, during their working career, but they may move back to another country to retire and to be closer to their families. So again, that'll be in the contract language, what that covers. But rarely do we find people who are unable to use their policies if they're eligible, just because they're designed to have that flexibility.
Mm-hmm. And so I'm 50 years old. When is kind of a good time, if you're kind of my age group, when's kind of a good time to start thinking about, like, no one ever wants to think about long-term care. The only reason I have a policy is because I do what I do for a living. And I know the more money you have, the more planning you have in advance, the better your options will be later.
Yeah.
When's a good time for people around my age group to start thinking about this type of thing?
Well, you want to start planning as soon as you kind of have that mindset to do so, right? And it doesn't cost you anything to plan. It's just taking the time to do the research, to talk to your family. So buying insurance, also you generally want to do as soon as possible for a couple of reasons. One is that the insurance companies are much more careful about the health of people that are applying, because they expect the claims to be out into the future.
Mm-hmm.
Right? And if you claim right away, then the insurance company actually isn't collecting enough premiums to pay for your claim.
Yep.
So from that perspective, you want to apply when next year in your healthiest, which tends to be when you're in your youngest age group, right? And it gives you the most options for coverage when you're really healthy. So you have choice of a lot of different types of products, a lot of different carriers. You can shop the market. And again, we work with all specialists in this, so they're shopping a very broad range of options. And you can choose from different price points and different types of funding, and a lot of different things there. So young is really great from a health perspective. The other factor that's really important is the younger you are, typically the less expensive it is,
Mm-hmm.
because they can spread that cost, over a longer period of time. And people get the best value when they plan when they're younger. So we're seeing incredible value for people that are, you believe it or not, in their 30s, they're in their 40s, because the insurance companies want to attract that type of clientele. Even though we might think, oh, long-term care is for people that are older, it actually, from a funding perspective, the sooner you fund, it's kind of like saving in your 401k, right? The more you can accumulate in terms of the amount of protection you'll have into the future. So from those two perspectives, it's almost always better to start as soon as possible. And then if you're in a health situation where it's not optimal to apply, you can wait until you're in a better health situation and then apply for coverage. So your long-term care specialist agent will tell you, make recommendations to you like that.
And what if they don't have a long, it's intimidating, if you don't have these types of professionals already in your Rolodex or whatever now I guess apps and phone contact lists, but my day and age, it was Rolodex. If you don't already have someone that you know and trust, how would they be able to find someone that they would feel comfortable working with?
Yeah, it's tough. There's fewer long-term care specialists out in the country today. In fact, we started our company, which is buddyins.com, to help match people up with top vetted long-term care agents. So that's exactly what we do. Most of our agents are actually on Zoom and are licensed in 40 or 50 states, so that if you're in California, it's okay to meet with someone in Florida on a Zoom call who really understands the market in California still. So you really don't have to find a local professional. Now, if you do have a financial planner that you work with, you can go to them and ask them about long-term care. And again, we would encourage them to actually, kind of talk to a long-term care specialist as well, because in today's market, there's a lot of different types of products and some solutions that people don't even know about that might be a better fit for you. So that would be my main piece of advice there.
Yeah. And so they would be able to just contact you or someone in your firm to be able to just have a consult and talk this stuff through.
Yeah, if you go to our homepage, you'll see plan, and then it's just a form, and that will actually send them directly to our team, and then we'll match them up with somebody kind of in our network. We also have a referral button at the top. We have so many people that even own long-term care insurance, and they want to, provide this type of option to their friends and family, and you can refer people to us. And again, our whole mandate is to make sure we're getting the best solution for the client we're talking to. We're educators first. Everyone in our network is about education. So they're not what you might perceive as an insurance salesperson, right? They're not hard selling. They're actually helping you with the planning process. And insurance is not going to be a fit for everybody. We understand that, right? There's a financial component to it. There's the health component we talked about. So at the end of the day, they're going to educate even if you're not buying an insurance product. It's about the long-term care plan. Like I said, that's half the battle. And so that's what I would recommend, is just get that conversation started, because it doesn't cost you anything to do that.
That's right. And what's your website?
So our website is at www.buddyins.com. And again, just on the homepage, you can navigate that. If you want to talk to me directly, I'm happy to do a Zoom directly with you as well. Everyone in our community, you have access to for the knowledge you need. And we're so happy, Annalee, to have you in our community, because it's so important what you're doing as well. We can bring in Annalee as a professional also to help with your issues if it involves point of care and point of need. We're talking to professionals.
Well, and it's important to have that collaborative approach, because you have a specialty in a place that I don't, and vice versa, and families need, it does take a village to have an aging loved one have a successful, and as a family to have a successful aging and caregiving journey. And there are solutions out there. So, my hope with these podcasts and having these great speakers that I have coming in is for families to realize you don't have to tackle this by yourself. There are professionals out here. This is what we do to help you in our own space. And for those of us that like you as well, that use that collaborative approach, if it's something that I can't help you with, or that's just not something that I do, I know someone who can help you. And just like you and your team, if it's outside of your scope, you have a whole trusted network of professionals that you do business with as well, that you've already vetted. And that I can't stress enough how important that is. When you're looking at these types of decisions, the last thing you need to be doing is Google. Like, you need to work with an actual professional who does this and can guide you. And it's going to cost money in some ways, and in some ways it might not, but you really need to make informed decisions. And your model is very much like mine. Mine is an education-based model first, because you can't make informed decisions if you're working off of misinformation, right?
That's right.
And there's a lot of misinformation out there.
And I think you feel the same way that I do. It's great to have built a platform to help our friends and family, right? These are people we send our friends and family to as well. Yeah. And that's how you can trust them, right? As somebody you've never met before.
Exactly. All right. Is there anything that you need to share, or we think we've covered enough ground?
I think we've covered enough today. Obviously, we could go a long time on this particular topic, but like I said, don't be shy. Make sure you reach out. Join. Annalee has a Facebook group as well that you can join. So make sure you take advantage of all those resources around you, and we're here to help you.
Yeah, absolutely. And if you want to learn more about the Care Right Family Caregiver Solutions Facebook page, you can just look right on Facebook and go into Care Right Family Caregiver Solutions Facebook group, and we'll let you in. So thank you so much for your time and your expertise, and more importantly, how much you care about making sure that families have the best possible outcomes. So
thanks for having me on. Appreciate it.
You bet. You bet. Have a good one.
Thank you for tuning tuning into the Care Right podcast. We hope today's discussion has provided you with valuable insights. If so, don't forget to like, subscribe, and share our podcast with others who might find it helpful. Remember, Care Right is more than just a podcast. It's a community dedicated to supporting family caregivers with comprehensive care planning, crisis management, and resources for every stage of aging. Stay connected with us for future episodes as we continue to explore essential topics in aging planning, elder care, and financial planning. Until next time, take care, plan wisely, and remember, you're not alone in your caregiving journey.